Welcome to FXcast. This is our FXcast market analysis for Wednesday, May 18th, 2011. In each of our videos, we attempt to find high probability trading setups. We look at the gold chart and compare it to the popular currency pairs. We'll come up with the low volatility watch list and inside bar watch list. We'll look at the economic calendar to see how it can affect our trades. And finally, we have an education spotlight at the end. With that said, let's begin. Okay, as we start off with the gold chart, we're going to notice a couple things. Yesterday, when we came down to our market profile on hourly, we talked about this range right here and whether or not the market will be able to get right through that and go back higher. And we can see that it consolidated, and eventually fell out. Now, because it came down on light volume, what are we seeing? It's coming right back up in light volume. But where is it going? It's going right back into this heavy volume congestion area. So the question is, are we going to hit this point of control and come back down, or are we going to have the strength to move back higher? When we come over to our ascending wedge, we talked about this, we broke it. Anybody that was aggressive could have traded that down to the 50 moving average. But one of the main reasons we said, let's wait for this to resolve is because it did what we thought. It went down to the 50 moving average and came right back up. So, again, we're still waiting for this pattern to resolve itself and tell us which way it wants to go. Does it really want to go down, or does it want to go back higher? So I still say sit on hands and wait for a better trade, but you can get a picture of what we're looking at. If we get above this congestion area, there certainly is a trade to the upside. Now, we've got the 20 moving average here. So we've got to trade to the upside, but are we going to go there and pull back just like we did today? Those are the risk management decisions, trading style decisions that you have to make. Now, when we compare gold with the pound dollar, we can see, as we've been talking about, it's weaker. What I want to see with the pound dollar, what I want to see with the Aussie dollar, and what I want to see with the euro dollar, really as much the pound dollar and the euro dollar, is the 50 moving average. What's going to happen here? And the euro dollar is almost here. What's going to happen here? Are we going to break through, or are we going to hit this 50 and fall right back down? The pound dollar has a little bit more to go before it does that. And the reason I'm asking this is, again, trying to determine what is the trend. What is the trend? We can now, on the daily, on the pound dollar, we can now go in here and draw a new uptrend line to see, again, if we break here, we're going lower. Otherwise, we need to go higher. We can obviously see that we put in lower highs. We put in a lower high on gold. So, again, what I've been doing is sitting on hands and letting the market tell me, what does it want to do? Where does it want to go? Now, we'll bring up the hourly for you just so you can see the market profile. Here's the Aussie dollar, and we can see just a lot of volume here, mainly because, look at it, we went up, down, down, up. So that means there's a lot of volume here, and that's why you're seeing these wicks come down and go back up. So again, my preference to sit on hand. For the pound dollar, we can see we do have a vacuum here. We do have a vacuum here, and also above 1.625, we do have a vacuum here. If we get above here, we should have a quick burst because we're into the light volume area. Now, there's still a little bit here, but if we break here, we should be able to go higher. But again, I'm saying sit on hands because I want to see what happens at the 50 moving average. For the euro dollar, you can see once we consolidated and finally moved higher, we went up rather quickly. But we paused. Why? Because on the daily, we're at the 50 moving average. So again, I want the market to prove itself. Tell me we're in a trend that I can trade. We are bringing back the dollar franc to you again off the daily chart, a sideways to down chart. There's a bullish inverted head and shoulders potential, and there's also potential to break back down and make a new low. So we're We have triggers for you for both directions. The action today actually came right down basically to our target entry. So below the wick. So we want to go ahead and trade. If we break the below 87.85, we have an entry to the downside. And if we go 89.70, we are going to the upside. Let's pull up the charts and take a look. Okay, so again, we're bringing this back to you. We've got the head and shoulders pattern that we're looking at right here. So breaking to the upside, we can go bullish. And then we were looking at this wick right here, which was that 87.85, which we're basically kind of hitting right now. So this is a trade that we're looking to go to the downside if it breaks any lower. If it happens to bounce here and runs up, we want to be prepared for that. We can see over on the market profile that we consolidated and broke right on down, and now we're consolidating again. You can see the volume picking up. So again, we want to be prepared to trade this. We can see where does this pick up? Picks up volume at 88.12, and that runs up to 88.35. So there's 20 pips right there. But once we get below, if we break below here again, where's that? Basically our entry, 87.85, we should be able to break to the downside. Our second trade is the pound yen, and on the daily chart we have a sideways pattern, but we also have a descending wedge. So kind of like the dollar franc, we have a break above, break below price, and it's not perfectly set up right now, kind of like the dollar franc to the downside. It looks like it's setting up, but we like to bring these things to you a little bit in advance so you can be prepared for when they happen. So let's pull up the charts and take a look. Okay, so looking at the daily chart, we'll bring up our little horizontal line. You can see our support. We'll now come over to our trend line and we'll draw it right on down. And so you can see we're trying to play this one way or the other. Now one thing to watch is where we are right now on the daily is the 200 moving average. And you can see for the past week or so we've been snaking around the 200 moving average with a retest of this past swing low. So this needs to resolve itself one way or the other. Since it's a descending wedge, you would think that it would break to the downside. So that's why we want to trade a break below 130.20 to the downside using the 200 as a stop. But we also want to be prepared to see if it decides to bounce here and take off to the upside. We can see in our market profile that where we are now, as we snake around the 200 moving average, that's where our point of control and where our high volume is. So yes, we need to get away one way or the other, but even if we do get to the upside of the lighter volume, on the daily we run right into the 20 to 50 moving average. So it would be better if we can get below these wicks, get below the heavy volume, and get into this light volume and push down to retest, or more importantly, get what we consider to be our safe entry to the downside. For our low volatility watch list, we have the pound dollar, we have the pound yen, and the dollar yen. For our inside bar watch list, we have the Aussie yen, the Euro Aussie, the Euro dollar, the New Zealand Canadian, and the New Zealand dollar. Let's pull up our economic calendar. As we look at our economic calendar, we can see a couple things. We have 2 minutes coming out today. We have the pound, the Bank of England, they have their minutes coming out. And again, what investors are looking for is some word change, some little hints as to what's going to happen. And later in the day, we have the FOMC minutes. Again, traders looking for some guide to what might happen with the interest rate, which could weaken or strengthen the dollar. In this particular FOMC minutes, they'll probably be looking forward to see if a third round of quantitative easing hinted, or QE2 light is what they're saying, 2.5. We also have some of the jobs data coming out for the pound. So again, are people working? Are the consumers strong? And then down here at the end of the day, we have GDP for the yen. all of these certainly can move their currency pairs. Okay, as we go to our education spotlight, we're going to continue our discussion over the roadblocks that dominate a trader's mindset as laid out by Dr. Rand Howe. And basically, we're talking about the fears that any trader has to overcome, again, to become a successful trader and to develop the trader's mindset. Today, we're talking about the fear of not being right and the fear of inadequacy. And, again, we talked about hesitation. And that's what the fear of not being right does. It causes you to hesitate. And it causes you to second guess yourself. And you make mistakes because now you hesitated. You're second guessing. You start to chase. And then you start this avalanche of wrong decisions, which leads to bad trading results. And the inadequacy because, the last time you traded this, you lost $2,000. The last time you were to trade all day, the last time, so, it's sort of like your mother-in-law talking to you about why you're not good for her daughter. So these things we have to control. It's not about, and I like what it says here about external validation. Again, people get on Google looking for all these external solutions to becoming a successful trader. New indicators, new trading systems, new books, new fancy color charts. But what it really comes down to is developing a trader's mindset. It comes down to working internal and winning that trader's committee, that trader's conversation that will allow you to enter a proven, back-tested system consistently day after day after day. Thanks, guys, and I'll see you next time.